I think you can time following the market, and you can probably time when there's going to be a decent move in the market, but to get the actual low, or to say a bit in the same way that Fibonacci, you're almost trying to get levels, which would be the turning point levels, which would be great. By definition, normally you're going to see the low, see confirmation of a low, and then you're going to go in afterwards. But that would be later, and that's not really timing. I don't really regard that timing the market. I regard that as following the market. And the best that most mortals can do, I think, is follow the way the market works. I mean, you might have a bear trap rebound where the low in May was £2.15. In June, it goes down to £2.12. And the end of day close back above £2.15 is your buy signal. But I regard that really as following the market rather than timing it.
What are you looking at? What factors are you looking at before you buy a stock, company stock?
I think the factors I look at, just because it's what I do, my job description is actually look at stocks which are trending, which other people are interested in, and see why, or try and work out why they're interested in those stocks. Normally, obviously, it's because it's a potential buy situation, and they want to get on the bandwagon. It's trending. It's the most watched or most called up stock on a website, and I'll have a look at that and just see try and work out why or how there's interest in that situation.
Do you think you can profit when a share price gaps?
I normally follow the gaps, actually. The gaps in terms of, for me, gaps are one of the simplest or the most clear-cut signals in charting. It's a sign that the market or traders are being caught off guard. The surprise, the shock there, and I think that it's normally best to follow a gap, even though we know it's said historically that gaps are filled, and so a market will return to the gap floor. But I tend to actually, for me, the best signals are gaps where you see a gap on a chart, you see a couple of attempts at closing that gap, you see the gap not being filled, and then you go with that gap again. So I find them very, very useful. And it's one of I think that if somebody said if you couldn't use moving averages or use oscillators, or indicators, I would be trading off gaps only.
Momentum trading, using volume to predict market moves?
Well, the volume, I think that is either at the same time it can be a great trend following indicator, and it also can be a great signal that the market's about to turn, too many buyers, too many people long, time to get out. So you use volume as the initial trigger for having a look at a stock or market, but then you want to see from the other aspects of the price action, or support and resistance, or moving averages, or being oversold or overbought, whether there's confirmation of the ongoing buy or a turnaround.